Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God.
Good morning. Good morning, good morning, good morning. What's up, Tony? Hope everyone's having a good weekend so far. Got a good amount to discuss. It's not going to be too long of a video today, but we are definitely going to cover what we normally cover. All right, morning, Eddie. All right, so let's actually pull up Forex Factory. Sub Chowezi. Let me see. All right, so we had NFP this last week, and now we have CPI. All right, so knowing that that is the case, there's obviously protocols in terms of risk that we have to talk about right away. It's just the way it is, okay? And those of you that have been with me for a while, I'm sure that you have seen the way that we navigate and think about NFP, FOMC, all these different things. Obviously, it's extremely helpful. It's extremely, it combats the negativity, right? Or the negative experiences that we could unfortunately face if we're too aggressive during times like those news events. All right, so CPI, it's a little bit different than the other news events like NFP, FOMC. Generally, those can be two-stage events. Excuse me. Generally, they're two-stage events. So the first, like if there's news at 5:30, which is NFP or whatever, and then there's news at 6:30, right, or 7 or whatever. It could be generally the first move is generally the fake move. The second move or the second news event is going to be the real move. So, if you do a study on that, you'll see that that's pretty much what happens. So the first move will take off at the first news event, which generally is the NFP news event. Sometimes it's not, sometimes it's later. But again, generally NFP, FOMC, two-stage event. First move is fake, second move is generally the real one, or sometimes it just doesn't move at all. CPI, though, is a one-sided, rip your head off type of news event. And generally, if you don't catch the move, you're going to be either ripped apart because it's going to go totally against you and just completely disrespect your stop loss, or you're going to miss it and not be able to get on. So in terms of how would we engage, right? How would we look to try to find a setup if we did choose to do so? Well, during CPI, you want to wait for it to present itself first. Think of the liquidity pool list that I give you guys both in my private community. I've given it here, some of them, and in my free Discord as well. I mention it every single week. It's like a paragraph that I send stating different important aspects at the start of a month, start of a week, start of a new day generally. And pretty much, what we got to do is, just pay attention to, whoa. Damn, my dog just snuck in. What are you doing, buddy? Sorry about that. What are you doing, buddy? Well, it caught me by surprise. He just came up in here. But yeah, so you want to make sure you're looking at the news, the different liquidity pools. I can mention them right now: the previous week's high, previous week's low, previous day high and low, previous month high and low. And generally, you just keep tabs on that. And then after CPI delivers, you can just pay attention to what's still available. London's high, London's low. Generally, that's also sometimes important. London's high and London's low, for you guys that maybe weren't paying attention to those liquidity pools recently or just last week, go study how London's high and London's low behaves, or how it's treated and used to set up specific moves and become a target as the daily range prints through both the London and New York session. You'll be pretty surprised, and you'll see exactly why I mentioned these certain liquidity pools, in this case specifically the London's high and London's low. Okay? Because a lot of times, if we're bullish, if you think of Power 3, the London's low will be targeted, especially if the open price is at London's low or close to it. So price can manipulate to get below that, trigger in people's stops to position smart money both at the London's low, where liquidity's at, going into New York, but also it could also be targeting below the open price if they're close together. And if we're highly bullish, if we've seen things that are just super aggressive, again, that's a phenomenon that's going to take place a lot. Last week is a beautiful example of that. Even if we're in consolidation, right? You're able to also use London's high, London's low as a potential framework because it might bounce around. I talked about market maker models inside consolidations as well. I'm not sure if I mentioned them too deeply on YouTube, but I spent a lot of time on like talking about that with my private community. And now I'm sharing the perspective with you guys so you can go and look at it if you trade market maker buy and sell models. And if you haven't incorporated the London's high, London's low, and previous day's high and low, for those that don't know, those are my favorite liquidity pools. I can just use those liquidity pools for the rest of my life and have a setup every day. And if you go back test and study how it behaves using Power 3 and then coupling those liquidity pools together, you'll see. I mean, you have a setup based on those pools of liquidity, aside from everything else, on a regular basis, every day. So there's no need to worry about, not finding a setup. If you know your model and you think about these liquidity pools, those things can always be your target. They can be part of your setup liquidity, because there's target liquidity and there's manipulation setup liquidity, because they have to trigger in losers. That's what the manipulation does. So, and again, a lot of times it'll reach for those levels, either hit them and take off to target the other side, or it'll use them as a target entirely and just run towards them. Okay? So yeah, again, that's something for you guys to study when we get off today, and just going throughout your career as a trader. Because again, those are extremely reliable. Like, I can't understate how reliable it is, how consistent it is for those to be targeted. And again, since I've mentioned it, you're going to be aware of it. Since you're aware of it, when you go study, you're going to start to see it a lot more in terms of the use case, how important they are, and how that operates within the Power 3 delivery on a daily, weekly, monthly basis. All right, so yeah, with that being said, again, CPI is like a punch you in the face, one-sided news event. So keep that in mind. Don't be gambling this week. We should look at it similar to NFP in terms of, when we're loading up to CPI, sometimes if the market looks choppy, that's going to be the reason why. And CPI, in my opinion, is also going to be used, just like FOMC and NFP is, to target things on the higher time frame. Higher time frame delivery generally needs a news event to be fulfilled, right? Because they need institutional sponsorship to really move the market around. And so I've mentioned it before, just want to reiterate it so it could really get drilled into your head. Higher time frame, like pools of liquidity, higher time frame delivery, like setups and whatnot, generally need a news event. It's similar to how the macro times work on the lower time frames, but the economic calendar can be used as a tool for timing higher time frame delivery. Okay, nobody talks about that on social media. I've heard anybody talk about it like that. because most people don't know what the hell they're talking about. Okay, so if you go study, I'm telling you, it's another one of those drills that you can add. So London's high, London's low, previous day's highs and lows, studying how those are navigated throughout each day, each week, and then of course the news events, seeing how higher time frame delivery it's needing a news event, and generally that's when the big moves take place, right? That's when you could time like a daily order block being traded into, that could need a news event depending how far we are. And then once it hits that, if there's like CPI on Wednesday, but we reach down into it on Monday, it was in a hurry to get to that daily order block, for example, bullish. So, and if it just stalls around in there going into like the Tuesday after the daily order block's been met, keep it in your mind that it may be waiting for CPI, because higher time frame timing in terms of delivery for targeting specific levels or moving to or away from them generally will happen as a result of the higher time frame economic calendar delivery taking place. Okay, so yeah, you could study that. And then again, the liquidity I just mentioned, those are two extremely powerful study drills that I've done over the years that really helps me. I still do it to this very day. You know, you got to keep sharpening the knife, right? Keep strengthening your weapons. Otherwise, they're going to become stale, and you're going to become rusty, and it's not worth it when you put in so much work. Okay, so just keep it up, like you're working out, right? Like you want your body to be healthy. You want to be healthy. You can't just work out for a week, and learn all the stuff that you need to know about working out, and then just not work out. Like what is that going to do? This is going to do absolutely nothing. You're just going to have wasted your time. So it's the same with trading. So, you know, don't get lazy. It's not a time to let up off the gas if you've been grinding your ass off, like many of you guys have. You know, all you guys on the call right now definitely have. So I know you guys are probably maybe not who I'm talking to. But yeah, this is not a place for laziness in terms of being a trader. And, you know, you want to stay on top of your game and continuously improving until you get something that you obviously can operate within on a regular basis. But you have to keep it up. It's like you got to maintenance it constantly. Doesn't mean you're gonna get to a point. I can tell you this: you're gonna get to a point where you're not gonna have anything to learn. A way that I help my students get to that point is I have everything separated into 10 categories that require systems to be built for each category. And if you go in the private Discord or the free Discord and private Discord, you could see the trader development roadmap I'm talking about, and get an understanding of, you know, what elements are there. But that helps you when you get a process built for all that, and you follow this, you follow this process. It helps you realize when you have arrived and you don't need to learn anything else. Okay, you just have to employ the things that you're, you know, strengthening, and just go about your business, continuing to sharpen the knife with experience, and then eventually, you know, you'll get to where you want to go. As long as you do the right stuff and stay consistent, don't overtrade and over leverage. You implement this stuff and you'll be surprised. All right. Tony said, "Do you think CPI is big like NFP?" Yeah. Just okay, cool. I covered that. Yeah, Friday was crazy. Take this into consideration, those of you that are on the call, those of you that watch the replay, maybe have watched me for a while. Everything has played out narrative-wise, direction-wise, exactly how we've assumed. Continuously, even just for the last couple of weeks, let alone the last almost 3.5 years. Okay, so it's been the same stuff continuously. And those of you that have spent even a little bit of time with me this year, I mean, it's just been phenomenal. You know, yes, prices kind of stalled out a little bit on the NASDAQ, which we're going to talk about. But, you know, there's reasons we'll discuss as far as why that is the case, which I talked about potentially being a likelihood given that it was the start of the month. Okay. If it's the start of the month or the start of a week, generally things are going to be shaky, right? Unless price is in a hurry to get somewhere on, like, say, Monday. But if price is in a hurry to get somewhere, like I mentioned the example with the daily order block, if price trades into it, maybe it's going to need a news event to push it, right? If it's in a hurry to start the week and we're bullish, right, and Monday gets down to a higher time frame PD array, expect that we're going to probably see a very sharp turn unless of course price is going to change from maybe bullish to bearish with the example I just mentioned. Okay, so what can we apply to what we've just seen this last week, aside from the fact that everything we've called out has worked out? We could basically identify that the start of the month is generally slow, right? So it's especially since we're at a higher time frame PD array, right? And so the whole week we've seen, yes, there's opportunities, yes, it's worked out, but again, it's the level of difficulty has been a little higher because of the changing inflows and just how things, the ebb and flow of the market, how it operates within certain times and around certain scenarios. Okay, like the start of a new quarter is coming, right? We are now a week before the start of the third quarter of the year. So that's another scenario where the week before, week of, and week after can generally present you with a harder condition to trade in. Okay, so from the last couple of months, I have laid out so many things on a list, basically listed things out if you've been taking notes, in terms of identifying conditions that are worthy of trading, or be able to identify whether they're going to be harder to trade, and when the good times are to trade. Okay, and I've also talked about the risk management adjustments that need to take place when we're able to identify this stuff. Okay, these are extremely important. These are things that most of the time, for 99% of people, is only achieved through experience. So again, this is a benefit by being somewhere where someone knows what they're talking about, because they can give you stuff that's generally learned ahead of time, or way down the line. You're basically given certain elements so you can apply them and start contemplating and thinking about and planning on before you reach that point in your development. So again, that as a result speeds you up, right? It speeds you up, so you start to learn a little bit quicker and realize what's important and what's not important, how you need to operate a little bit quicker than other people, because it's, again, an experience-based thing. Lots of the stuff I talk about is experience-based stuff, psychology and all this stuff. It's all through my own personal experiences, and of course technicals as well too, right? It's all kind of under that umbrella of experience. Okay, so again, I hope this makes sense for CPI and some of the stuff we've talked about so far. Wanted to lay the groundwork for a little bit. So let's look at the bonds first. Okay, so the bonds, they've kind of breached some levels that I didn't want to see them breach, but all in all, we have still closed inside this weekly volume imbalance. So we talked about this weekly volume imbalance. I would have preferred to see us reject from the midpoint of this wick, as I talked about over the last couple of weeks. Right here. So I did map this out. Okay. This has been here since last week and the week prior. The line in the sand was going to be this 2-week bearish order block 50% level. Okay, if it was going to break that, then I would have been like, okay, maybe it's time to start to consider price reaching up for more buy-side liquidity. Has that happened? No. You can also see that we hit a quarterly bearish order block. From the quarterly is a 3-month chart. Okay, and you can see how beautifully that has held. And notice how we've done a lot of higher time frame analysis. Hopefully you guys have also started to notice how important it is and how grounded it keeps you, so you don't flip-flop. Not one time overall have I thought that the NASDAQ was going to go lower, right? There's an allowance always for price to want to go against it a little bit, to just retrace a little bit and just set up the bigger move on the higher time frame. But for the most part, if you're rooted in these higher time frames, which is why I spend so much time there, it's where I spend most of my time in the first place. But the more that you're able to stick onto that, the better you are at being able to hold on to an idea. And it's across the board for every asset. Mind you, think about this too. I mentioned this last week too. Notice all the assets we look at. Okay, if you look at all the assets, compare weeks and weeks and weeks of the analysis that we've done across the interest rate markets, currencies, DXY, and all 3 indices, every single asset has done exactly what we've asked it to do. Not just the NASDAQ, not just, 1 or 2. Every one of them. Okay, so mind you, that just adds on to the value of this community, both on YouTube and especially in my private community, right? We're not just a one-trick pony. You could be a Forex trader. If you followed what I was talking about, we called the buy all the way through this market maker buy model. So we've been calling the narrative for this asset too. I have some people that just trade Forex, and they complain saying that I don't spend enough time there. I'm not a Forex trader anymore. I used to be. So being that I used to be a Forex trader and I use the asset still, it's still valuable for you to listen in, even if I'm not going to trade it. You still get the narrative if that's something you're trying to to get good at, and everything is together. So if you're going to trade like the indices or the Forex assets, for example, you still got to understand risk on, risk off to help confirm, which is pretty much the process of us looking at these specific assets. One thing I don't really incorporate all the time is gold. I don't really talk about it too much, but it's the same stuff, right? Here, I'll pull up the risk on, risk off template for y'all real quick, for those that maybe haven't screenshotted it yet. So these are the relationships overall. Okay. So the T note and the T bond, they're the same. That's I don't know why I separated them. They're pretty much the same. So just think about them as the same, right? That's just like the different the different times, right? Like 30 year, 15 year, 10 year, 5 year, whatever. I only use a 30 and 10 and 5. You can use others if you want to get custom, but that's generally where I planted myself. So you could use a 15 year instead of the 10 year. You could alternate, right? You could use the 1 year, right? You could add it on. But generally, those three are highly effective as far as I'm concerned. So yeah, screenshot this if you haven't already, because that is pretty much what we're looking at as we do the analysis. Why is this important? For those that maybe don't know, that are new. Excuse me. Well, this is important, and we start here and work our way up to the asset of our choice, which is the indices, at least for me, because this is our background information. You want to gain clarity, right? You want to get in and be confident in a narrative. You don't want to be swayed back and forth just because price goes against whatever it is that you're assuming. The way that you achieve that is understanding the markets as a whole. The market is a giant machine. Every single asset is part of the machine. Certain assets are more influential than others, given the asset class or place that you're looking to trade in. Okay, and for me, it's the indices. So the indices and even Forex is impacted by this stuff too, especially with the interest rate markets, because currencies chase yields, right? So yields being the yield market, and the bond market is generally opposed to Forex, the foreign currencies like EU and GU, and the indices. Okay, and then obviously you could see it's also the same for commodities, right? So if DXY is bearish, that again affects what the bond yields are going to do, right? The bond yields line up with the DXY. Okay, so they influence what the DXY is doing, generally because the currencies chase the yields of that specific currency, that country's currency. This is the same for every country, right? That has interest rates in a currency of their choice. Okay, and then again, this relationship is important because of the fact that everything's connected, and it gives you clarity, right? You don't want to look at just one asset and think, oh, well, the NASDAQ is going to go higher, so that's what I believe, and that's all I'm going to look at, because something can go wrong, right? If the indices are going higher, maybe it's going to hit a bearish order block of some kind on the higher time frame, but then it's going to turn around because the bonds and yields make an adjustment, like they change, and if you're not aware of it, you're not going to be able to be flexible and make changes, like reliable, trustworthy changes to your assumptions, and you're just going to try to fall into the cycle of forcing things, right, and get caught on the wrong side, and then the whole spiral of negativity begins. Can I really do this? All this other stuff, right? And so that's combated when you have a deep understanding of things like this. And again, this is where my accuracy comes from. Chowezi said in the chat, it really has played out, and he's been here for maybe a couple months or so, and so he's seen it, right, just like everybody else that spends time here. And again, I want to make it clear that it's not because I'm good at just technically looking at one asset. It's because I have a depth of knowledge and understanding based on things like this. This is a critical component, and it's not the funnest thing to talk about because it's not taking a trade for some people, right? Or show me an entry or whatever. That mindset's going to crush you, okay? But again, you want to keep focused on the things that are important. And part of my job, or at least my goal when I go live, is to get you to pay attention to what's important and what you need to start really focusing on to then be able to call bias and narrative. Because once you get bias and narrative, and then of course watch the live streams and see how I navigate the models, things really start to fall into place over time. Obviously, it seems like it's a lot at first, but I can come up with a bias and narrative assumption in 20 minutes, maybe less. Sometimes I've done it in 10 minutes. I wake up late or whatever, and then I get on live with my private community, and we just fly through it, and it's done quick. But the process of explaining it, getting through some of the mindset and why certain elements are important, obviously it takes time. There's new people hopping on and stuff, and I like to also reinforce as much as possible, because again, this is where your accuracy overall is going to come from in terms of bias and narrative, and being able to be extremely accurate. And if you're rooted on the higher time frame, like we are, you can see the benefits of that just by being being in the community for a short amount of time. I've had the bias and narrative, bias being day-to-day direction, whether it's a retracement or an expansion, narrative being what the higher time frame, weekly, monthly chart is aiming at achieving. But I've had us in line since January. We called the drop in the indices and followed it all the way down. Okay, and you don't have to take my word for it. It may be a big statement. You can go back and look at the replay during that time, because I was live doing live calls at that time. Okay, it's not just things being talked about. It's real information that's being shown live. It's a lot more active this year than I've been in any other year, simply because I want to try to help people as much as possible and get those that are interested ready to take advantage of the crazy volatility I expected as a result of the 2024 election in the U.S. Okay, so yeah, I hope all that stuff resonates, right? But again, we come back to this. My line in the sand, as you see mentioned here, which is mentioned for the last week, 2 weeks actually. Line in the sand was a mid portion of this 2-week bearish order block. Notice how it came right up into it, but it rejected, and we're still now getting back below this weekly volume imbalance as well. So, I think that'll continue unless, of course, these levels end up getting violated, right? This is a beautiful idea, still showing that, yes, it's having some trouble. Yes, there is SMT at the lows, as far as I can see. It's still there, but the narrative hasn't changed. Why has it not changed? Well, 3 PD arrays haven't been violated. The main fair value, or the main PD array I'm using on this 2-week chart still hasn't been violated. Okay, it's respected it, and it's rejected pretty aggressively. And if you take a glance at the other two, it's the same stuff is taking place. There's SMT. I don't think that's going to be too aggressive unless, of course, it displaces and violates some of these levels. I think it's just set that low, right? And then, there's still a likelihood of it wanting to take it out until 3 PD arrays are violated and we start to see price really getting pushed around, opposed to this downside objective. Because again, narrative doesn't change just because you see a retracement like this. Narrative changes when higher time frame PD arrays are broken, specifically 3 PD arrays that are broken. And if our bias and narrative overall comes from the higher time frame, weekly, monthly, sometimes daily, but the daily works inside those two. If it comes from those time frames, those are the time frames that will tell us the narrative has changed. So we have to apply the 3 PDA rule to that specific group of time frames. Okay, because the lower time frames are subservient to them, right? They are the little kids to the parents, which are the higher time frames. So anything happening on that lower time frame may be a short-term idea, or short-term turn, or short-term, run on stops or whatever, reaching into or setting up to reach into a weekly, a monthly, a higher time frame PD array. Okay, and you could see that understanding, if you just really submit to that understanding keeps you calm, mellow, and trusting that just because price retraces doesn't mean you throw away your narrative idea just because it had a retracement. Okay, and that, again, the efficacy to this, the accuracy, the value in this is obviously shown over time as you watch. And those of you that are on the call right now have seen it. You've witnessed it continuously, and you're going to continue to watch how effective and important this stuff is until it is just a part of your psyche as a trader. And hopefully that happens soon, Not because of me, because you hear what I'm saying and you apply it yourself. Because, you yourself are the one that's going to take the trade. You yourself are the one that is going to execute and manage the risk. I'm not. But again, I hope that your experiences here can really bleed into you and just become a part of your analysis and the way you operate as a trader, because this will separate you. I promise you, right? So yeah. That being said, I'm going to continue to think that this is going to hold up unless, of course, it gets violated. If it does get violated, we'll have the wick down here that's been violated. This one too, so it's trading through that. Order block, midpoint, volume imbalance, and then of course if it gets above all that, there's no need to even consider shorts at all. We would then look to maybe seek the wick up here. We would have an inversion fair value gap, right? So if it breaks up above this, we also have this fair value gap in here that gets violated. We could already see that there's PD arrays stacking up to change the narrative, and we'll be able to reliably trust that it'll end up targeting upper range targets, maybe this wick if it gets up there, but that's way later unless this stuff kicks in. Otherwise, I'm going to continue to support the fact that it's going to go lower. If the indices are going to go higher, though, obviously at some point we don't want to see this continuing to drop, right? Because this is suspect for it to continue to drop. This shows that there's a crack in correlation. There's been a pretty strong crack in correlation between what the indices are doing and what the bonds are doing. And it's not unreasonable because there's a lot of things happening. I just heard the other day that the U.S. economy has to give out $10 trillion of bonds. They have to sell that, I think, to balance out the debt, or to something that has to do with the debt, like aligning with what's being basically given out or sold versus the debt that we've accumulated. So I'm not sure exactly what the impact is related to that. I'm not an economist, but it doesn't sound like that's a very good thing. But that information made me figure out what is causing this crack in correlation. There's heavy movement when it comes to interest rates. Our Treasury Secretary has been talking about bonds and yields constantly, and he's out here trying to sell, right, to get people to buy them. Like actually buying the bonds and yields, or the bonds themselves. So it's kind of, you can get lost in the weeds, but nonetheless, that's why we've had this crack in correlation between the bonds and the indices, and that's a very volatile, hectic environment. Okay, so knowing that, again, you want to be very cautious. The volatility has been amazing. I personally have not risked over 1%. No, when I'm really confident, I could risk up to 2.5%. But I've been, 1%, 0.75% of the entire account, across all my accounts, and you could, there's no need to push too hard. There's no need to over leverage. It's not worth it, because look at the accuracy and consistency we have, even in a condition that is victimizing people nonstop. I hear stories every day in my DMs on Instagram about people just like begging for some type of solution because they're getting crushed. But those of you that are here with me, you're not getting crushed. Right? I don't think I've had a student blow their account in like a year and a half. So it's pretty good. Just follow instructions. Well, the ones that follow instructions haven't blown their accounts, right? So it's just one of those things, right? But yeah, I want to slip in a quick reminder. Definitely don't forget to like the video, subscribe to the channel if you haven't already, and definitely share the video and content with anyone you think can provide value to the community as a whole, or at the end of the day, just get value as well. I want to have people that you guys know come, that that are traders that take it serious, because it makes the community more tight knit. It's kind of how my private community is. There's a lot of recommendations versus just like mass marketing, and I feel like it's made a really nice culture in the private community. So I'd like to have that here too, which I think is taking place. Got some amazing students, Tony being one of them. He has been doing amazing since his time here just on the YouTube channel. So super proud of you, Chowezi. I think I've gotten an update from you as well a couple times, saying that you've been doing pretty well as well, and just like at a minimum learning a lot. So again, thank you guys for doing that, and I appreciate your time here. I hope you guys got value so far. But yeah, so this is my opinion on the bonds, so we'll move quickly past that. So if the bonds are going to potentially go lower, we have our invalidation levels set. We have a very similar thing happening here with the yields as well. So if we just take away some of the annotations, some water. So yeah, whatever the bonds do, we're going to expect that the yields are going to do the opposite. So if the bonds are going to go lower, we're going to expect that the yields are going to go higher. Okay, the bonds generally influence what the indices are doing, foreign currencies. The yields generally influence what the DXY is going to be doing. Okay. Again, there's a crack in the correlation, right? It hasn't been too, it's kind of been like inversed, right? The yields have been going higher with the indices and foreign currencies, and the bonds have been going lower with the DXY, which is very strange. I mean, that's just a pure crack in correlation you could see behind, again, assets that are extremely important. So again, that's not something you use to be fearful of and just not engage, or think to yourself like, oh, I'm scared to engage. You just have to keep it in mind, because if at any moment the indices were to start just aggressively pounding the sell side, breaking different PD arrays and just not showing interest to go higher anymore, while the bonds just continue to tank, that may be a really large manipulation that we've been encountering, and we'd have to then start to make adjustments. And with the crack and correlation happening like this, that's a risk at any moment. But as long as everything stays intact in terms of the process we use to validate things, which I've talked about ad nauseum, there's no reason to worry about it or try to change what you're doing. You're only changing the bias or the narrative specifically when, again, the higher time frame changes something, which is 3 PD arrays being violated. Order blocks and fair value gaps that were supporting price are now not supporting price, so on and so forth, right? So yeah, and if that doesn't happen, you just stick to it, even with the crack and correlation. When there's a crack and correlation, you drop your risk a little bit, right? Because that's just the way it is. If you ask any professional trader, if they have things that don't seem, exactly the way they want it to be, they'll cut their risk if they're smart. Okay, you'll have those handful of people that want to risk everything on every trade no matter what, and they're stupid. If you're going to trade like that, you might as well never go full time at all, because you're going to be stressing so badly, you'll probably cut your life expectancy down by years, because it's just nerve-wracking. If you got to pay rent, if you got to do all these things, I mean, it's just nerve-wracking to trade that way. The way that I trade presents you with, or the way that I teach you to trade, and the way that I show how to trade, is very, very much to minimize stress, to amplify clarity, and then of course, as a result of the things being done correctly, we have consistency as a result. So yeah, so again, you want to make sure your risk is cut. You don't want to be too aggressive. The crack and correlation is still relevant, but again, we've seen the bonds going lower, favoring shorts still. We got the yields going higher, so that's what we're going to continue to support unless 3 PD arrays are violated to the downside. If we go to the 2-week, we have a bullish order block, similar to the fact that we had a bearish order block here. You could see the inverse relationship that takes place with the indices or the interest rate markets, the bonds and the yields. And again, I hope it makes sense in terms of the relationship those have and what impacts they have on what particular assets, given risk on, risk off. So if this doesn't break this fair value, or this, not fair value gap, but this order block midpoint, if it stays above this, we have a wick here we're going to watch. We now have relative equal highs up above us. So that is kind of interesting. We're going to want to see how that's used moving forward. Is it going to continue to push higher? I'm assuming until things change that that's what's going to take place. So, that's my assumption. We got an order block here. Volume imbalance has been beautifully respected. So we see the large wick pushing away. And you look at the other ones, they're kind of stuck in a range too. So, that could present a problem for things. When a good example of a way to reason with the current consolidation, aside from the fact that it's the start of a new month going into a new quarter, another thing that is an indication that things may be a little bit harder to trade in the asset you're trading. We'll use the indices for an example. Another good tool is to observe whether we are in consolidation or if we're trending within the indices or within the interest rate markets as well. Okay, because if we're consolidating in the interest rate markets, generally, if we see that translating to the indices, that is a normal phenomenon, especially if we're going into a new month, a new quarter, and like maybe we're ahead of NFP or something. Consolidation can be triggered it can be identified that we're in a consolidation by looking at this relationship. So it's just yet another reason why we start here. It's another reason why this is something I focus on so much. And I spend look, we've been talking for 40 minutes about this asset class. And it's pretty much the way it is all the time, because we have to know what's happening here. We have to know the ins and outs of how to analyze it and how it's going to impact us when we go into the indices. And of course, if someone doesn't like that, that's fine. Then, you can come back later or, watch somebody else. But it's that important, and if you stick around long enough, you see how important it is. And, it may seem like a tedious task at first, but again, once you see the result, you're going to be second guessing your first opinion if you ever doubted the importance of this. Okay, so again, we can kind of see that they're in consolidation, some of them, right? We may see the 30-year kick into consolidation too. It's the same with the bonds too. I know I didn't mention it on the bonds, but it's the same phenomenon. We're still in consolidation pretty much, or range bound when it comes to the 10 and the 5-year. If I just flip over there, you can see that taking place here, right? So again, the narrative hasn't changed overall unless something changes. So we're going to stick to favoring, until proven otherwise, the bonds going lower and the yields going higher. We have our levels mapped out here in terms of what should hold if that's going to be the case. And not only that, these are the same levels that would have to be violated for us to overall change our opinion from one direction to the other. All right, so yeah, moving on to the currencies now. We see that we are still moving higher. Let's move to the monthly, see where we're at. Okay, again, we have called this entire move lower and higher. We've been able to navigate the narrative on this, and we don't even trade it. I don't. Doesn't mean you shouldn't. I just grown to love the NASDAQ and the indices, and they're just, they're just clean. I don't get like wicked out as much, and a lot of times I'm able to have the small stop loss at levels that I put my stop at, levels that I'm comfortable with putting my stop at, and it could have 1 point, like getting traded at 1 point close to my stop, and I'll still survive. If you're in currencies, the broker you're trading through will open up the spread because they have the luxury to do that. They don't have the luxury to do that in the indices, which is why I trade the indices, right? But you could see that it's still marching higher. We're still going higher. I do see that there is a slight SMT at the highs on this monthly chart, right? We could kind of see there's that SMT happening. So we'll have to obviously observe what that's going to result in. We do have this monthly. Oh, actually, it's a quarterly fair value gap. This was a target that I've been calling for, the quarterly fair value gap. Again, it's something that you can go look at. It was talked about live on YouTube and in my private community. So, you know, you can go check that out and see how the forecasting has been, which I actually encourage you to go do, because it's pretty eye-opening, that's for sure. But yeah, so where we're at currently, I wouldn't be surprised if it does give a retracement of some kind. You know, these are some of the levels I guess we could keep tabs on going higher. We are very overextended. I mean, we have 1, 2, 3, 4, 5 consecutive months going higher. So in my opinion, it is kind of due for a drop. At least something like this, right? We called this breaker as a support level to push price higher. Again, that's something you can go watch. We called it beforehand, and obviously throughout, and it's played out flawlessly. You know, coupled that with the market maker buy model to frame out the buy overall from the last couple of weeks / months since February. So again, I wouldn't be surprised if we do attempt to try to get back down there one more time, and then look to maybe set up a further buy position overall. One thing I do want to mention too, I've gotten this question a lot, and I kind of stated it last week too, but I'm doing higher time frame analysis. Okay, some people that can't trade the lower time frames kind of get concerned. Well, if you can't trade the lower time frames, just do exactly what I'm doing and position yourself at the levels I talk about on the higher time frame. Obviously, your risk, you got to figure out the risk situation and whatnot. That's going to be personal to you. You're going to have a larger stop. It's going to have to be probably seeming unreasonable to you because, I mean, that's just the way it is as a swing trader. But again, you see how consistent the higher time frame delivery is. I mean, if you can't trade lower time frame, trade the higher time frame. Do exactly what I'm talking about and use the news events as your macro time. You can also obviously use normal macro times too. But, you know, if you can only stay above, say, the 1 hour, frame things out on these higher time frames. Look for your model performing on the 1 hour, maybe the 15-minute. Get into that and just hold it for a little while, because the stuff works out. You know, you don't have to just be a day trader. I'm technically teaching swing trading and how you can approach it without spending, you know, so much time highlighting it. Just off the simple fact that the framework of what we look at comes from the higher time frame. So if you can't trade the lower time frames, I mean, you can do the same thing on the higher time frame charts, right? So yeah, last couple of weeks I've been getting a lot of questions about that, and then of course navigating the conditions. People have been getting wrecked, but yeah. So I hope that clears that up for those that have asked me on Instagram. But yes, so yeah, we're still bullish. It's still reaching for buy side. We have filled in the whole entire quarterly fair value gap. Going into a new quarter, obviously things may change. We got to continuously observe how price is going to behave the next 3 weeks, so we can determine what's going to happen. When the quarterly adjustment comes in, I'm going to do my quarterly analysis, which you guys will get to see. I don't think I've done it on YouTube before, but I'll probably do it on YouTube as well, or maybe I'll share that private call I have. I think I'll just do a separate one, and just, you know, give you guys that as well. Very helpful stuff. It sets the tone for 3 months at a time. It may seem pretty crazy to think that someone can call a particular a particular narrative for months at a time, but it's possible. And again, my private community students that have been with me for years, we've pretty much done that. Quarter to quarter, we're in front of what price is doing. And if, you know, things are a little foggy, we figure it out on the other time frames. But we've definitely been able to call out. Like if you go back 3 months ago, like June, like from April, go from April, May to June, and you just see some of the stuff I was talking about when I mentioned the quarterly time frames. You can go back and see it. You know, we assumed everything that's taking place right now, and it's been pretty flawless. So yeah, we'll jump on that when the quarter adjusts, probably around like the 16th. But yeah, so price is taking the buy side. We do have this high up here. I do want to see how price is going to treat this low. If we go to the daily, this low here, I can say that if it kind of violates that, I'll be a bit suspect, or I'll be kind of suspicious whether we're really going to try to run higher again. And if that takes place and the bonds haven't found their legs to go higher, that's going to be a problem. Okay, so if price breaks through that and the bonds are still tanking and the yields are really aggressive to the buy side still, we'll have to start considering possible contingency plans to make adjustments to maybe switch going into the new quarter from bullish indices and currencies to possibly bearish for a short time, or maybe a long time. We'll see what happens around that time. But this is definitely going to be my overall line in the sand. I would prefer it to not break through from this high up here down to the low, right? The midpoint of that. I would prefer to see us stay there. Notice how it's respecting that. That's not random. That's related to balanced price ranges, which I've talked about enough. So yeah, we'll see if that midpoint holds. If not, again, this is my line in the sand. Otherwise, if it holds, we're going to continue to target buy side up here. And then we got the monthly high up here too. So 2 monthly highs, and then we got the previous week's high here. This is a previous week's low. So going back to the list of liquidity pools that I mentioned, you could see it's on full display, helps you identify critical levels without, too much thought being put into it. Previous week's low, previous week's high, monthly highs and lows, those are generally going to be the targets, right? If it's going to go higher, this will be a target. This previous day, which is Friday, will potentially be a target. Maybe it punches lower, sweeps that low, triggers in that liquidity from Friday, then goes. But again, it may even trigger the buy side, right? It may open up down here, wick through the high, respect the midpoint of this wick, and then start to displace lower, in which case I would then look to assume downside. But again, that's a contingency for what my main objective is. It's going to be seeing if we can continue to push price higher, because we don't pick tops, we don't pick bottoms. It's going to have to give me some real evidence that it wants to go against what has been working out for the last couple of months, right? Which I wouldn't be surprised if it does turn around, because we've been bullish for 5 straight months. Okay, so when the time comes for us to make that adjustment, we will. Okay, so yeah, that is my opinion on this asset. So let me just make sure there's nothing else. So yeah, again, you want to pay attention to the breaker here. We'll see how that behaves. And yeah. So this is a monthly low. This is a weekly low. This is another weekly, previous week's low down here before it gets to the monthly low. So again, if it breaks down below those levels and starts really attacking through the midpoint of what I just showed and breaks through these levels, multiple previous week's lows, that again will start to make me suspicious, and I will most likely look to see if there's an argument to make adjustments from bullish to bearish. Okay, so I hope that is clear enough as far as what I'm looking for here, so it can be helpful going into the week. And yeah, so with that being said, let's move on to the juicy stuff, right? The other stuff that people want to look at, which is DXY and the indices. So the DXY here, we have a wick hanging out right there. Okay, hold on. So Pandy, hey, I'm really struggling in determining higher time frame bias. Doesn't mean I'm not working 6 hours every day, but I feel all the work is going in the wrong direction. Maybe you can suggest videos from our channel that I should watch, at least start working in the right direction. So let me ask you this. How long have you been spending time on my channel? Is this your first time here? I'm sorry to hear that, by the way. Everybody starts like that when they come to me, but everything changes when they spend some time. So you're in the right place, brother. So this is your first call. Okay. How long have you been trading ICT concepts? Let's get some specific details out the way. So about a year and some change. Okay, so yeah, you're still really new. So I feel like you may be putting a lot of pressure on yourself. Maybe a little too much pressure. You know, it's not always something we want to hear. But I've been trading for now almost 6 years. August this year is going to be my 6th year. I've been full time engaging with the markets for about the last 3.5. So, you know, I was where you were at. Lots of my students are, you know, or were where you were at. A lot of them are now obviously moving on to different things in terms of trading in their career. But I always say that, you know, you want to make sure you start, first of all, with the 2022 model. So you, first of all, have a model. Okay. Obviously, there's a mixture of things. You're not, you know, in terms of certain elements, like basic information, you always, as a prerequisite, want to be digging through ICT's concepts. And then, of course, complement them with some of the perspectives I share. And then, of course, if you want like more intimate, like support from me, like on a more regular basis, 6 days a week, I go live in my private community. And then, of course, you know, there's lots of traders in there too that are helpful, that have been where you're at. So that's always an option as well if needed. But in terms of what you can do right now, before you would even make that decision, you should go through the 2022 model content. You want to go through all of that. You want to focus there, plus Power 3. Power 3 is something that if you haven't studied it a lot, like insanely, like you may understand like a little bit of it here and there, but if you haven't obsessed over studying it and watching every single ICT video that talks about it, I highly suggest you do so. I do have some stuff in my free Discord that's also very helpful in the trading plan development section. I have different videos for ICT that you should start at, which I think it's been pretty beneficial for many that have looked into it. So I think it'll benefit you as well, since that's where you're at and what you're looking for. Sorry, I had some work for a minute. Let me rewind your video and we'll catch you in a minute or two. Okay, yeah, I'll just continue to explain this. So you definitely want to start with Power 3. You definitely want to dig through the 2022 model. Obsess over every single ICT video that says that. Not some random dude on Instagram, not some random dude on YouTube, even me, right? I want you to watch some of the things that ICT has to offer first related to these concepts before you jump into mine. My Power 3 series, though, is basically aimed at, you know, me giving this advice. And it's something that I feel it really complements, and I've gotten a lot of great feedback on it in terms of students that just start, and I tell them to go watch Power 3. So, sometimes they watch ICT stuff and it doesn't make sense, but then they come to my Power 3 and it makes total sense. Because there's no fluff. It's just straight to the point. Not that ICT has a lot of fluff, but ICT kind of, you know, it goes off on a different rants and whatnot, and some people can't stand it. I mean, it wasn't bothering me, but it affects other people. Excuse me. So yeah, just definitely Power 3. You could watch mine if you want to jump into it. Maybe you like the style of teaching I do. It'll be helpful. Damn, I got freaking hiccups. Holy crap. Like, I don't know what's going on. But yeah, so Power 3, you can watch my stuff if you like my teaching style in terms of Power 3, but I still suggest that you watch the Power 3. Sufi, matter of fact, one of my students named Sufi that just hopped on, who started with me on YouTube and then joined my private community, he's one that I had this conversation with as well, right? Like where to focus on, you know, like where should you begin? Like where should you start? Like, you know, things are really scattered around for many, but these are the things you want to focus on. Power 3, 2022 model. Once you really nail that down, obviously you can mix in my Power 3 stuff as well. If you like market maker models, if you're a little further down the road, you can watch my market maker model video as well. It's another thing I got great feedback on. But then you also, after you do that stuff and get a foundation, you want to make sure that you go reinforce that foundation by watching ICT's 2016 stuff from start to finish. You want to take your time. It's a year's worth of content, and if you try to cram every video in, within a month, it's gonna be fully understanding in terms of or fully understandable why you can't soak up anything. You know what I mean? So, why was I tortured with 2016? Hey, man, it's a good torture, okay? I mean, it is kind of like hard to watch, but you gotta hear it from his mouth first, so then you can kind of just have the extra reinforcement. But Sufi, although it was somewhat torture, the recommendation telling you to go there was you telling others the easy stuff, and maybe. Well, okay. In my defense, Sufi, you started with already some background with the 2022 model and some of the other things that I'm mentioning, right? So you kind of were down the road a little bit. I did tell you to watch that again, but then watch 2016 stuff again. And I'm sure that you're really glad that you did, though, because you were stopping yourself from doing the thing or one of the things that are so important and so impactful by getting the foundation, right? And of course, some like my teaching style a lot. And obviously, if you have that groundwork, it makes it easier for me to guide you even further in the right direction. Because you get on the right path, it may be a little bit bumpy at first, but then you later on, after you go through it, you now have a travel guide, aka me, to help guide you through what to focus on, narrow down some extra details that maybe you didn't realize, because I just have a little more experience applying the stuff. But you got to do these things. You know what I mean? Obviously I haven't built a course. I'm still in the works of building it for my private community, just so I can give it to them for those that need it potentially, or just want to have it for reference. But it is what it is, right? It's best to listen to the things that I point you guys to, and then of course I'm here to glue the pieces together that may seem scattered around a bit. But yeah, I have to agree that sometimes it feels like torture watching his videos. It's sad because he does it on purpose, but like, God, please, like, just get to the point, right? Let me see. But damn, it opens up. Yeah, exactly. See, I knew you were glad, right? Glad to dig into the torture, because you were refusing to do so. But once you get through it, you could see, like, Sufi's a good example. It really helps you. And Sufi, you do have the right to do it, because I personally know, right? Like, I've been doing this for a while. I've watched his content over and over and over obsessively, and it's just like, when he gets to certain parts where he just goes off, I'm just like, please, bro. Like, it's interesting to learn about his life and stuff, but then again, some stuff is like stop yelling about the Robbins Cup, please. Okay, just stop. It's so like unnecessary. Like, it's crazy. It's every other freaking video in Twitter space. He's yelling at somebody about the freaking Robbins. Entertaining, I guess, in some aspects, but when you're trying to learn this, because it's life and death, like, this is what I want to do, I can understand how it's torture, because I felt the same way. Right? So, Sufi. Okay, let me see. Tony said, before I found him, I was way back there. I was. Oh man, see, that's the thing. You guys come here, spend some time, and it's worthy of your time, and it's really, really helpful to you guys. You guys are the reason why I know what to focus on too in terms of teaching. My students have built me into the mentor that I am today. My teaching style and stuff, it's all based on the feedback I've gotten from people like you guys, and my private community over the last 3.5 years. And just as grateful as you guys are for me, I'm just as grateful for you guys, because I probably wouldn't be able to teach the way I do and get things taught in a way that's so clear if it wasn't for the feedback, right? I had to do it for myself, right? Teach myself in a more simple way, which translated to me being able to obviously teach others, because I'm not a rocket scientist. I'm just a normal guy that obsessed over this stuff. So I was able to make it easier for me, so I saw if I can make it easier for others, and And then you guys came along, all my students, and it just made me even more effective in terms of messaging. We support each other. Yeah, that's another thing, Sufi. I mentioned that earlier about the private community. You when you go into the private community, it's a bunch of people that are thriving, that were where everybody else was at. We all deal with the same problems, and we're there to help each other out. And the people in my private community are freaking savages. Some of them, I have an 18-year-old that started with, I think he's probably 19 now, named Harley. I mentioned him a lot lately. But he's only been with me for a little bit over a year, and he's absolutely insane. Sufi, you've seen what Harley does, right? You've seen, he's so young. He's younger than everybody. And he is crushing it. He has less experience than a lot of people, but he just spent time here, did exactly what I told him, focused where you need to focus, and he is just a freaking savage, dude. I mean, it still blows my mind away. I'm jealous myself, because I'm like, damn it, I wish I would have been able to learn as quick as him. But he came to me and studied what I told him to study. Obviously paid really close attention to ICT stuff, and it put him in the right direction, and he was able to fly, and carry his own cross, if you will, on his own. So I also started with 2016, and now I'm close to finishing 2022 model. All right, Chawezi, I want you to make sure that depending on how fast you went through the 2016 stuff, if you went through it within like a couple months, and if you go back through it and you see things that don't make full sense, you want to definitely go see where those weaknesses are. You're not going to use everything in every PD array. It's good to have information on all of it, though, so it stands out if it does show up. And then, you got that pattern recognition down, or just like you can recognize things. But you want to make sure you go back, like I tell a lot of my private community students, go back and review where you think your strengths are and weaknesses are when it comes to all the different content and different technical things and whatever else. And then, of course, your self-reflections you should be doing on a weekly basis, which I tell my private community students to do, should also include what was I good at, what was I weak at, where can I improve, what videos can I use to improve, what questions can I ask on like these live streams so you can improve. You want to constantly be in a state of reflection until you get to where you're trying to go, or get your skill set to where you want it to be. Chris, so many people have different opinions on changing state of delivery and order block. Please tell me what exactly it is. So changing the state of delivery is generally what basically sets up an order block. Basically, it tells you when the change in the state of delivery takes place, right? Like this here can be looked at as a change in the state of delivery. Ran buy stops that were taken, when it shifts below this low, that changes the state of delivery from on this time frame from bullish to bearish, right? So, and of course, the same concept is true on the lower time frame. This here was a change in the state of delivery, right? It had SMT at the lows, but we had a displacement through the high. We wanted to see price stay above this as an order block, and if it is an order block, oh whoops, where was I? Oh no, you guys saw it. But yeah, if it's an order block, essentially a change in the state of delivery is what's taking place within an order block. But that change in the state of delivery is also leaving behind a balanced price range, which is what an order block is, what a breaker is. That's what those things are doing. The change in the state of delivery is just highlighting the moment in time where price is going to change from one direction to the next. Generally, the best idea in terms of identifying a change in state of delivery is after a stop hunt in a time where you think price is, like in this case, going to go bullish, or vice versa in a time where you think it's going to go bearish, right? It's simply price hitting a level where you can anticipate that price is going to take off from, preferably rooted in the higher time frame. But then when it shifts above something like this, if it's going to respect that, right, it's going to present you with a change in state of delivery. And that leaves behind, again, a bullish order block, a bullish breaker for the most part. A lot of it's more hinted at an order block delivery, right? That's, for the most part, the main idea that I've seen ICT highlight. I haven't really heard him mention it outside of mentioning an order block, because that's the importance of an order block. Yes, yeah. Look at it that way. Sufi, remember, don't dilute yourself too much by looking at too many people on social media. You're in a place where you see the evidence of things like all the elements are here in the community, either here and then obviously in ICT's YouTube channel. Too many opinions will fog your judgment, and it's like looking at multiple different people's opinion on specific models. When you find something that works, you're trying to adjust it, maybe trying to add more and more and more, and it drags you down. It makes you take longer. I was trying to do 5, 10, 15 different styles of trading when I first started, thinking that the more I have, the better. And when I just simplified it, focused on only ICT concepts, and the 2 other mentors outside of ICT that I joined because they were willing to do one-on-ones, I focused my attention there, and that was all I needed. And a lot of the styles weren't differing. It was all ICT purists. They weren't mixing in Ichimoku and at moving averages and supply and demand. All these things conflict with what ICT teaches because they're trying to make a name for themselves and be different, when in reality they're just like trying to adjust things to make it look different, and just steal ICT stuff. And as a result, you get confused. Like change of character. What the hell is that, dude? Whose bright idea was it to take change of state delivery and then make it change of character? I mean, they couldn't even change the statement. They had to include change. I mean, it's incredible. It's so ridiculous. But yeah, so keep that in mind, Sufi, especially since you're in the private community. Please don't dilute yourself, because students that do that make it even more difficult for me to help them break some of the bad habits, to fix some of the problems that arise as a result of that. And again, it's just clouding your judgment. You don't need anything else. You don't need any other style. If you have one model, work on that. Don't look at anything else. I know you see me executing on multiple different models, but I have students that have different models. So I don't want to leave them out. Market makers and market maker models and breakers. Some use optimal trade entry. I mention that sometimes. I execute sometimes on that. Institutional order flow entry drill. But again, just remember, every single model has a continuation variation. So you don't need another model, at least for now, until you're comfortable with what you already have. And again, Sufi, I'm not sure if you've done this yet, but I want you to go into the private community and look at the trading plan development section. I want you to send me a PDF sometime this week. I mean, if you could do it today, please do it today. But if you can answer all 10 of the subjects with your process related to each of the 10 subjects I have in the trading plan development section. I mean, if you can add screenshots too, that'd be great. Again, it may take you some time to do this, but I want you to start working towards getting me an answer for that with what you have so far. The reason I want you to do it now, even though you're still learning and still working things out, I want you to get it to me now, so then we can look back 6 months and then we can compare and contrast as far as where you were at in terms of organization of your process to where you end up in like 6 months. We'll do it 6 months at a time. So in 6 months, after you send me that one, you're going to do it again in another 6 months. So it's a continuous trading, a trader development roadmap / mapping tactic that I have students do. So yeah, and students that already get an answer to that, I obviously have them just continuously check in with me. And I haven't received from some. I'm not going to put y'all on blast right now, but I am going to DM you today, so be ready for that. You know who you are. You know who you freaking are. Let me see. So, you said you're down to one model now. That's it. Beautiful. Even though I can use other 4 or 5 models. Yeah. So what I want you to do, given that's where you're at, brother, I want you to take those 4 or 5 other models, use them as confirmations. Because if you enter your main model, I want you to see how those models can also offer maybe extra entries, but at a minimum, use them as extra confirmation to support whatever idea you're engaging on, okay? So instead of spreading yourself too thin, if you do want to keep incorporating those because you see them and they're standing out, that's a good thing that they're standing out, because that means you're going to potentially later on be able to use them and be dynamic if you do the right things with them, which, again, you want to start with that process in terms of using those models, those extra ones that you see, as further confirmation. Okay, similar to how we use order blocks and fair value gaps and how they deliver as price is moving. Is it respecting the midpoint? Similar to how we use wicks, so on and so forth. Or same as how we use the 3 PD arrays as well to get violated. One or two of those models may be used as the PD array inside the 3 PD arrays you're looking to be supported as price moves in your direction. Does that make sense? But yeah, I want you to use them as in that context rather than for extra execution. So just so you don't fog yourself up, you know what I mean? And give yourself analysis paralysis. Okay. Whoops. Let me see. Got to change the chat thing so I could see everybody. Chowezi said, Chris has been helpful. Even if I miss a live stream, I always came back after the stream to see what I missed. Yeah, beautiful. And everything has played out since we started being here. Yeah, exactly. If you don't mind, I'm about to take a nice little screenshot of that real quick. Whoops. I hope you don't mind. But yeah, that is beautiful. I love seeing that. Because even for people that hop on, because I don't have a huge community, but the stuff I give out here is so helpful. It's crazy. And, even if students don't end up ever getting into my private community, I'm doing this on YouTube for a reason. I'm not doing it for any other reason than to help, and of course I do have a private community, but some are just not going to need that type of help. And that's totally fine. It is what it is. But those that do need it, like I needed it, I needed it. I paid $3,700 for 2 extra mentors outside of ICT just so I could shadow them because they're really exclusive. One of them I'll mention for you guys is named Joe Miller. Okay, he is an ICT trader that trades hundreds of millions of dollars in capital privately using ICT concepts. And he is the reason or the source as far as what has helped me focus on the higher time frame. Because he's not a day trader. He's a swing trader. So his perspective, think about it. I'm a day trader. Okay, and I paid a swing trader to teach me or to really drive home, because he has 12 years experience. I paid him to really teach me more in-depth, one-on-one on how to navigate the higher time frames. Okay, he's not on YouTube. He has a YouTube channel, but he doesn't post. He's exclusive. He's a very exclusive individual, and he's extremely expensive. And I heard a lot of good things about him from Jade Cap. So I took his advice and chose to invest in him, and that was one of the best investments I ever had. So again, you're getting that type of investment in the things that you spend time here listening to for free, right? Let alone my private community that has access to one-on-one sometimes when they need it. Although they spend time in, at first they may need a lot, but eventually they don't even need one-on-ones at all. They feel like they can run on their own, and that's the goal. That's something I take a lot of pride in, is getting students to be able to move on their own. But yeah, one of my other mentors is named Joe Miller, right? He's an ICT trader. He's amazing. I wish I could say go follow his YouTube channel because he's got value there, but he doesn't. He pays attention to only his private community and his exclusive mentorship community, because it's that's just what he chooses to do. He doesn't want to spend time on social media. I don't blame him. If you're making tens of millions of dollars a year, your mindset somewhat changes, and you want to be, your mindset changes. I probably wouldn't do that. I'd probably still be giving things live on YouTube. I just like hanging out with y'all on top of the fact that I know what I'm doing is helping so many of you, and makes me feel good inside to know that I'm able to give back in that way. But yeah, Joe Miller, that name is written in history, I'm sure, at this point. Maybe not on social media, but in the hidden ranks, because he blows everybody out. It's incredible. It really is incredible. You think $2 million from Jade Cap was pretty crazy? You've heard ICT and some of the Twitter spaces say that there's some students he has that they're not really that public, but they make quadruple the amount that we see some of these traders doing. Yeah, well, Joe Miller is one of those people. And yeah, it was worth every penny I spent to get that information, which of course I'm now able to share with you, beautiful people, right? So yeah, that's why I'm so amazing, man. I can't wait to have 6 months of time here. Yeah, it's only been 6 months, bro. Not even 6 months, and you've been learning aggressively. And Tony, you again are a beautiful example of that. Sufi is definitely making some progress too. Again, Sufi, please don't forget. If you can't get it done by next week, I understand. Just let me know. But please get me that update as far as where you're at currently within the 10 categories I have in the trader development mapping situation. And then, of course, that's a good thing we could talk about as well. We can hop on 101 for that. Just let me know when you're free. Choice said everything's played out. Yeah. But yeah, so yeah, I appreciate all the engagement and you guys chiming in. I love hearing what you guys think about things, how you're doing, how you feel about certain things. Sufi said, my eyes can now catch models within seconds, so it's easier to use them as a bonus to my model. Yes. And again, it's critical. This is where people mess up, right? Many people. They learn all these different models. They think having more models is going to help them. You have to have a foundation first. And then you slowly ease your way into the other things. I have 4 models I operate within, right? I've mentioned it before, but I'll mention it again. It's I started with the breaker. I moved to the market maker models. Then had institutional order flow entry drill. Then I added on, obviously, the YouTube model because it just fits beautifully within all those models. It's very interesting. So, it took me 6 months to develop my understanding for each of those models, let alone me learning all the basic concepts and terminology and all the different stuff when I was first starting. So you could see how it took time. It was unrealistic for me to think, yeah, I'm going to just be a master in a week, right? I thought that at first. And then I blew like 12 grand in a month and a half. And that was all the money I had at the time. And, I was about to have a baby, right? I just found out that I was going to have a baby. I had a chaotic relationship. Then COVID hits, and I'm just like, every arrow that could be thrown was being thrown at me while I was trying to be a good trader, So I had to figure out, like, what can I focus on to make this less stressful, and how can I narrow my focus to things that are more important, so then I can take things one step at a time. And then, of course, when it came to me figuring out what model I wanted to use, the breaker is the one that stood out. So I focused on that for 6 months. And then I started learning about market maker models. And so I started dissecting that. And then I figured out that works very well with many things like together. So the breaker fit within the market maker model framework. Market maker model framework also goes hand in hand a lot of times with Power 3. There's a massive gem I just dropped right there. So go look into that as well. Power 3 / market maker buy and sell models. I mean, it's it's one of those things that experience has taught me. So definitely, if you haven't thought about it that way and you use market maker models, definitely dig into that and try to see what you can mine from that awareness. Tony's not. Tony is actually just here on the YouTube family. He's still part of the family. That's for sure. All of you guys are. But yeah. So so take things step by step, one model at a time. The first model that you resonate with, that's going to be your main go-to all the time, and that may change. A lot of you guys have less than 5 years experience, so or less than 3 years, I should say. So there's still a lot to learn. It's a process, and if you plan on trading for your life, if you think about this as a lifelong thing, even though we may want our circumstances to change right now, if you're thinking about this for a lifetime, if you're like in your 20s, even if you just take the next 5-10 years to just study, you're still going to be young when you hit that point in life. So again, don't put so much stress on yourself. This kind of goes back to what one of our new viewers, Pandy, from earlier was saying. He's having struggles with certain things. It seems like he may be a little bit harsh on himself. But for him, again, just what I just mentioned, give yourself time. If you're under 30 years old, even if you're 30 years old, which is stage I'm at right now. Even if you're at that point and you're just starting out, there's no reason to rush. If you're 40 years old and you don't have to work and you can go on vacations and do everything, unless you've taken poor care of yourself over the last, decades, you should be fine and feel young still. And especially if you don't got to go to work. If you don't have to go to work and you're 40 years old, you're gonna feel like you're 20. So it's just the way it is. As long as you take care of yourself, which is, again, that's another important thing too. You want to make sure your health is good, because if you lose your health, if you don't eat right, if you don't work out, it's going to be a serious problem. You can't trade well if your body is disintegrating. At some point, we all will hit that point, but you can prolong your youth by taking care of yourself. And why am I mentioning this in a conversation about trading? Because it's something that can affect you as a trader. If you have like a lot of health issues, it's going to be hard for you to focus on making financial decisions in a high stress environment. So you want to think about that stuff and plan ahead. What you do today or what you don't do today is going to affect you and show either a result or a negative impact in the next 5 or 10 years. So let's keep that in mind. That goes for everything too, like your habits, everything that you do in your real life. Again, the market's going to be a mirror. So make sure that everything is centered around, how can I be the best person I could be? How can I be the most disciplined? How can I get the best out of my life? And, that'll translate to you as a trader, how well you're disciplined, all that stuff. You can't be a disciplined trader, a good money manager, if you have poor money management in real life. If you just like spend all your money all the time, unless it's obviously necessary, like for rent, whatever. If you're reckless with your own personal finances, again, you're not going to be able to manage risk in the market. If you're impulsive in real life and you're not taking your time with things and doing things in a quality fashion, you can't expect that things are going to be smooth in your trading with that type of stuff going on. So the beef going on with Trump and Musk, do you think it's going to affect the markets? Not really. That's kind of outside of things. Maybe it does, maybe it doesn't. Tesla is melting, unfortunately. That's fucked up. I'm pissed about that because I have a lot of stock in Tesla, especially after they locked in together. Dude, come on, Elon. Kind of pissed me off, dude. You can't deal with this outside of Twitter. He wants us to cut debt and whatnot, but it's come on, dude. Apparently he was upset because Trump denied a couple of the people that he wanted to put into the administration, because Trump he's not going to just trust anybody. The man's been shot at multiple times. He's had a bunch of chaos. They've almost taken him to jail. They've tried to kill his businesses. So yeah, I would be kind of suspect about those specific individuals as well. So, Oh, speaking of Harley, I mentioned this young savage earlier. There's him and his YouTube channel. What's up, Harley? Good morning, my amazing friend. Hope you're having a good weekend. Yeah, he said, this is true. Discipline is needed both in trading and real life. 100%. Absolutely. 100%. This young man is super wise for his age. It's amazing. It's absolutely. I was just talking about earlier, dude. I'm a bit jealous, bro. I wish I would have learned as fast as you have. But hey, definitely go subscribe to his channel. I'm sure that he will be posting trading stuff. So definitely be on the lookout for that, because I'm sure he's going to have a massive impact on others as well. He's an amazing individual, very wise young man, like I said. So he has a lot of stuff in his corner for him to become a true savage and a blessing to the world, especially the world of trading. That's for sure. So yeah, definitely go support him as well. Tony said, everything is refreshing. Oh, wait, let me see. I'm 50. I'm a few months and been trading for 4 years now, and I'm glad I'm here. Yeah, I'm grateful that you're here as well, brother. Again, you're going to be one of my testaments to the fact that it's never too late. And, you just defeat that mindset of, oh, it's too late. And just think what this can benefit later on. And it'll just be amazing. You're going to really, really appreciate that you never gave up and did not think it was too late. Because as long as you're breathing, technically, being 50 years old, you're only at halftime in your life. So it goes back to, when 20-year-olds or 30-year-olds are freaking out like, oh, I'm too late. Dude, you're not even halfway through your life. Assuming that you take care of yourself and you can live till you're like 90 or close to 100. Hopefully you're not a raisin by that time because you took my advice and took care of yourself. But it's still beneficial no matter what age you are. And Tony, again, you're going to be my testament. And so everything is refreshing, and being the best version of yourself will show in everything. Yeah, exactly, Tony. Sufi said, let's go. Age is just a number. Yeah, exactly. 100%. The monster's here. Plus YouTube channel. And plus on YouTube, maybe in the future. But yeah, that's his YouTube channel. It's in the works. There's no rush, Harley, for you to do that. But again, he's going to. He'll pop in. Harley is a pillar in this community. He's definitely one of he's a very, very special individual. Just things I've seen him do. We've talked about a lot of stuff. I've grown to really appreciate this young man. So he's definitely somebody to keep a lookout on and, watch his journey. Because it's going to be well worth your time. That's for sure. Yeah, you're welcome, Harley. Appreciate you, brother. Appreciate you. You're an inspiration to a lot of other people in the community too. Just so you know, I get messages all the time about you and how are you doing what you're doing and what did he do that I can do and all that. So you've already become a pillar in one of my really cherished relationships that I've built through doing this. So yeah, Chawazi said I gotta go. I'll come back to finish the stream later. Okay, yeah, for sure. So yeah, getting back to some of the stuff we were talking about. Again, we see this breakdown below this low. We called this entire run lower. I actually called the buy too. If you go back to this area and price, I was calling for these relative equal highs. I called for the rest of this fair value gap to get tapped into. That pretty much took place. Once it did that, closed below it, started displacing, and once it got below this fair value gap, we were already determining that it was a market maker sell model. So again, that's a beautiful lesson from October. You could probably start in November of last year. Moving to the high, see how I targeted the buy side. When I decided to make the adjustment from bullishness to bearishness, and then when I decided to frame out and highlight the market maker model and how we followed it all the way down, and then how we even continued to march lower, targeting this fair value gap down here, right? It may seem crazy, right? But think about it. We've been in line with walking the market across multiple different asset classes for months, since before the year started, right? Once price was delivering and showing us whatever it was showing, it became apparent, and we just kept like a dog on a bone. We would not get off of it, and we're still not off of it. And I'm not going to get off of it probably till November this year, which is generally when I just pull back aggressively on my engagements and, start to reflect and stuff like that. Obviously, depends on what's happening. But regardless, it's a very small risk time, November to December, going into January too. We walked this entire thing. So far, we've reached all the way down to here. We've hit, we still have a little bit of this fair value gap left. If price is going to want to dig down into that a little bit more, that could be the case. This is a quarterly fair value gap. We talked about that. Price reached into it. Again, this is something you could watch me call. I didn't just place this here. I've had this here for a while in terms of what price is targeting. And once price retraced into here, I said we got to watch this fair value gap. If we stay below this and this, it should be able to reject. It has done that beautifully. So just overall, I also said that the midpoint of this wick should be respected. Again, all this stuff has been talked about from the last couple weeks. I think those of you that are here with me on the live right now, you were here and watched all this. So this is like preaching to the choir. But for those that don't know, that are new maybe, when you watch this video, if it's on the replay or if you're here live at some point, this is This has all been mapped out ahead of time. Okay, and prices basically navigated this monthly fair value gap inversion. Is danced around. If you break that into quadrants, you can get some really good details as far as what levels were important, how price behaved around certain levels. And we have multiple new week opening gaps. Look at all of them, just layered together. So prices had a hard time trying to get through that. Hopefully price can stay below this wick. I'm going to assume that's going to be the case, and we're going to attempt one more time, possibly until we get down to this weekly fair value gap. Quarterly fair value gap. And then if it was to completely fill that in and then reject, maybe get back outside of it, that would be something I'd be interested in. If it fails here and doesn't blow this quarterly low out, and it chooses to break through, starting to get through these, we do, I believe, see the yields again going higher. So if that is going to be the case, right? If we break through these levels, say it breaks through all these new week opening gaps, say we end up getting above the wick here, the midpoint, say it doesn't respect that, say we get above this gap in here, which is a new week opening gap, but also a volume imbalance. And then, of course, if we can get deep into this wick and break outside of this for value gap, right, say it gets up here, with the yields going higher, that will tell me that we could reliably now potentially change the narrative from bearish, targeting the quarterly for value gap, to then look to seek bullishness, buy-side targets, which in this case would be the high here, the 75% of this wick, and then potentially this high as well. But again, that's a little bit far from here, but we'll see if that's something that takes place. For now, that's not what my opinion is. My opinion is we're going to continue to drop unless these levels I just mentioned are broken. And this is pretty much the simple process, given what's in front of us right now, on how I would gauge whether the narrative is going to change or whether I should hold the narrative, counting different PD arrays, watching how price behaves around them, and then also using the interest rate markets. For this scenario, the interest rate markets, if they continue to go higher in the yields, and this stuff happens, what I just mentioned, that's going to be even further support that we're going to go higher. So then instead of forcing buy or forcing sells, I would then be able to adjust to moving to the buy side for the DXY. That would potentially result, especially if the bonds go lower, that would result in the indices looking to maybe look for sell side as well. So again, unless that changes, for now, everything is still intact. We got this fair value gap in here. We got this monthly fair value gap. We have a couple other ones on the lower time frame. Is that on the daily? Yeah, it's on the daily. And then we have one on the lower time frame, which I'm going to take off. Okay, so yeah, essentially a pretty strong line in the sand is going to be this high up here if we're just looking at the daily chart. And then, of course, all the different conceptual ideas or context I just talked about, they'll come into play, the new week opening gaps, how it delivers using the levels in this monthly fair value gap, this inversion fair value gap, and then how we get up here. And if we get up there, that would change my opinion. Otherwise, I'm going to support the fact that this is still going to blow out the quarterly fair value gap. Okay, so all this stuff that we've went through already, having all this back end information that's very important in terms of what should or shouldn't happen in the marketplace with the indices, taking that information first, then going into the indices and trying to figure out what our opinion is based on that. Obviously, you can come to a stronger opinion when you have this stuff behind you. Okay, so again, just to reiterate, this is why this is so important. Some people can't handle going through these assets like this because it takes too long. And again, I'll say it again. Go somewhere else. Because if you're going to complain about that, you're going to hate everything that I do. Okay? And I don't want to waste your time, and you'll be wasting mine as well. If you ask a question and that's how you think, I'm okay. I'm good. It's okay. I want people to be here that really want to understand what it is that makes us so accurate. If you scroll back into the comments, you see there's evidence of others that have been here for like a month or so, or a little bit over a month, sometimes over a year, obviously, because I have some faithful students, and they see it on a regular basis. The higher time frame, everything we call out for almost every single asset, it's not perfect all the time, obviously. But for the most part, the last couple of months, every single asset from interest rate markets to DXY to currencies to indices, all of my profit targets for every asset has come to fruition. I could have taken a trade in every asset class following the narrative that I've been giving you guys and everybody, and would have been able to find an opportunity, all rooted in the analysis that takes so long, right? It takes a little bit longer because I got to explain each step. I do this in 10, 15 minutes when I hop on the live calls with my private community, because I don't have to break down a lot, because they're kind of immersed in it every single day, literally like 6 days a week, except Saturdays for the most part. Tony said, "Soupy, come back." But yeah, it's definitely CPI week. So yeah, with that being mentioned again, CPI week. Again, I want you guys to make sure, even though we're super accurate and through NFP we've been accurate and everything else, that's not an encouragement for you to go in there and just start trading like it's a normal week. You want to have caution. You want to be very cautious when you approach this stuff. Especially during these times. We got a lot of stuff happening, and the worst thing you could do is try to do too much as a new trader and blow out your whole account and make yourself feel like crap. It's unnecessary stuff that we do to ourselves. You don't have to blow an account to realize that you need to have risk management. If you do, there's a problem, and you're already stepping in front of your own success. It's like, don't cross the street because there's cars coming. You see the cars, and the person gave you that advice, but you're going to choose to just walk anyway because you're just going to, you just want to get across the street, similar to, we just want to become successful and change our situation. Well, if you walk into a street where there's cars going and someone gave you advice and you get ran over, whose fault is that? Right? And why would you do that in the first place? You got to figure out when to cross. Same with trading. You got to know when to trade. And if you're not going to take the good advice, again, you're going to just make it harder for yourself, and you're going to make up things in your mind as far as why you're failing, because a lot of times it's going to be stuff that avoids you from taking accountability, and that's a problem, huge problem. Many people deal with. I dealt with it, and you have to kill that part of yourself, and you have to be able to transform your mindset by thinking and doing the right things over time. Into the trader you're trying to become. The person we are when we first start trading is not the same person that we're going to be when we do get to the point of profitability or consistency. Okay? It's a total transformation in mindset, total transformation in belief, and total transformation in just the way you think in general. Not only about trading, but about everything. Touch on the importance of your actual life, how you live it, versus what's going to happen in trading, how that stuff needs to align, the importance of that. We talked about that earlier as well. So again, it's one of those things, very important. Most people don't learn that unless they go through it and they figure it out later. I'm telling you right now, just like with the cars example I said, there's cars moving. Okay, so this is a battle that you'll have to face in the future. So you might as well just think about it at a minimum before you have to cross that bridge. Okay, so yeah. So given all the stuff we've talked about in terms of the analysis so far, bonds and yields looking like the yields still want to go lower, or the bonds look like they want to go lower. Let me just double check. Bonds want to go lower. The yields look like they want to go higher. That should still impact this to want to go higher, the currencies. We'll see. There is an SMT, so we got to monitor how that's going to behave. We're going into a new quarter, so again, week before, week of, week after could be a problem. So it could present you with a little bit harder time. So you want to make sure you keep that in mind. What does that mean? Does that mean go in and be scared? No. Does that mean go in and hesitate? No. That means if you are going to engage, if you're going to frame out a setup and participate in the market as a professional, you're going to want to cut your risk at least by a quarter, right? And don't overtrade and over leverage. It's not a time to ever do that ever. Okay, it's never acceptable. It's one of those things that will destroy your career, even if you learn every concept possible and trade for 20 years. If you continuously overtrade and over leverage, the market doesn't care who you are. You're going to blow your account. You're going to take bigger losses than you need to, and you're going to tread water. You're going to swim in one place or run on a treadmill of trading. Just never go anywhere but seem like you're busy because of over trading and over leveraging. So, that's another thing to totally eliminate. Okay, so, don't hesitate. Don't be fearful. Just keep in mind, this is what the battlefield looks like right now. Okay, and bullets are flying everywhere every time you get into the market. Okay, the market makers are trying to destroy everybody, the algorithm, whatever you want to say. And you want to make sure you're prepared and you're protecting your account. You and your stop loss are the only thing in between the market stealing your money. Okay, and it wants to. It wants to take your money and wipe you out. So again, when we are able to anticipate conditions possibly being a little bit more hard, you want to make sure that you take that to heart and adjust. Make adjustments. Write in your journal. If it's CPI, FOMC, NFP, federal fund rate announcements, Fed speeches, and maybe am I missing one? I'm not missing one. If it's any of those things, write in your journal. This is how I need to operate my risk. Make sure you highlight, I'm not going to be fearful because of this adjustment. I'm just simply adjusting my risk. That's it. Because I know it could be a little more difficult, right? If you're going into a new quarter, the week before, week of, week after, make sure that you are lowering your risk, lowering your frequency. Never overtrade in any circumstance ever, or over leverage. A holiday, right? A day before, day of, day after a holiday, cut your risk. Day of a holiday, don't trade at all. Okay? So make sure you have these things in your journal. If you don't have these things in your journal, if this isn't part of your trading plan yet, like you've heard me say it, but you haven't written it down and made it part of you, you need to do that. If you're taking my advice and you're here to have me help you, this is something you need to do. 100%. Write it down, because if you don't have a plan that's organized, you're not going to be able to follow the plan. It'll be much easier for you to make excuses and go outside the lines and do something else if you don't have a plan. If you have a plan, it reminds you. So then if you break the plan and you lose, you now can tell yourself why. Oh, well, I should have just followed the plan. And you tell that to yourself enough, if you're a stubborn person like I am, eventually you're going to follow the plan because you're going to get sick and tired of doing things knowing that knowing that the plan could have saved you the hardship and saved you that couple steps back that you may have encountered. Okay, so yeah, write this stuff down, and always be on the lookout for these types of things that I'm mentioning. I always mention different things about the conditions based on what I've learned, what I've found is valuable in terms of high probability, low probability, when to adjust my risk, when I can push 2.5%. Not saying that you push 2.5%, but keep your risk small. You don't need a lot to do a lot. In my private community, I showed, or I think I did in the Discord too, in the free Discord, but in my private community, I did a video the other day showing a funded account that I started in March, a secondary one that I'm going to add. But I took that opportunity to pretty much use the funded account to prove that all you need to do is attack the minimums. And if you follow the rules that I state, the rules that I just mentioned are part of that for when to trade, when not to trade. But if you follow the rules, 1 to 2 trades a day, never overtrade, okay? Follow one model. I use the YouTube model, 2022. And you listen to the things that we talk about in terms of how you need to operate and attack only the minimums, right? Just 20 to 30 points in the NASDAQ, 5 to 10 in the S&P. I showed that over the last 3 months, you can make your funded account get passed in a very stress-free environment. If it took you 3 months to knock down $6,000, but every 3 months you can faithfully knock down $6,000, or maybe you can only knock down $3,000. If you do the math, $6,000 every 3 months is $24,000 added to your bottom line at the end of the year. Half of that, $3,000, which is even more easier, that gets you $12,000 extra added to whatever amount of money you make per year is. Okay, so whether it's 12,000 or 6,000 every 3 months, if you're trading a funded account in a very slow, calm fashion, doing the things that I talk about, tacking the minimums, focusing on one model, knowing when to trade, when not to trade, and everything else in between, that is a hugely impactful stimulus that you can give yourself financially. $10,000 every year as a trader with a funded account, just so it's as you're working towards trying to go full time or whatever you're trying to do, that's a beautiful goal to aim at before you aim at trying to blast off and quit your job. That $10,000 or $12,000, if you can only make $3,000, or if that's something you think is reasonable for you, that's $10,000 or $12,000 you can add to a personal account. So you could start to grow into your personal account, right? Of course, this is like bare minimum. This is like not targeting a lot at all. It's targeting, $250 a trade, risking $250 a trade, sometimes less depending on what the setup is. 20 to 30 points in the NASDAQ, 5 to 10 points in the S&P. Okay, that equates to, for the most part, $250. If you wanted to cut it down a little bit and target maybe $150, you can cut your risk down even further. $150 added up over time if you're consistent, which we've had an 86% win rate the last 3 months. I showed it in the free Discord as well, and I also showed it in video form in my my private community. So I'm not just talking on my ass. I never am. It's all facts, okay, with evidence. So if you can have the skill set that I try to teach you guys here, and if you guys can just listen to the rules and think more reasonably and be more patient with yourself, you can do amazing things, a lot quicker than you really imagine. I mean, even if you make $6,000 a year with a funded account, as you're working towards these bigger, more mighty goals, is everybody making $6,000 a year trading? Last I checked, most people, 90% of them, 90+% of them, are not making $1. None of them make anything. Okay, so if you can make $100 a year, if you can pay your phone bill once a year with trading, you are beating everybody, crushing everybody, because most people are negative. So again, I'm saying all this to really highlight the things that I focus on, the things that I tell you guys to focus on. I even did a demo on it, like a demo, not a demo account. It's an actual funded account, which I showed live with my private community, and I shared a screenshot in the free Discord about it. And it's not perfect, right? There was a day that I got pissed off because everything was freaking out. The tech was fucked up. The thing kept logging me out. It was just a pain in the ass. It was consolidating. I had a bad day the day before, and so all the groundwork was laid for me to break my rules and be a dumbass. And my ass was so angry, I ended up, doing too much. I took 4 trades instead of 2, and it ended up coming back to bite me. I didn't cut my risk. So in the image that you'll see if you go to the free Discord, you could see there was one time where I didn't follow my rules and it nosedived for a minute. But I stayed composed. I came back the next day, got over it, and went right back to business as usual. And you could see the consistency that comes as a result of following my rules, or following your rules and the rules that we talk about, versus not following the rules. Okay? It's on visual display, right? So again, I hope that those of you that do go check that out can be inspired to be less harsh on yourself and set reasonable goals, and just understand that what I'm telling you to do, is not something that will make you take longer. It's a worthy thing to do. Target minimums, especially if you haven't hit profitability yet, 20 to 30 points in the NASDAQ, risk 1-to-1. The risk to reward ratio, by the way, is 1-to-1 on the funded account, which I can pull up, send a screenshot on later on as well. Okay. If needed, right? I mean, I show it all the time in terms of the stats with the funded account. I've been showing it, from time to time, screenshotting it and sending it out. But the other day I showed the actual screen, the account, showed the whole freaking thing. Then I sent the screenshot to the Discord. I felt that I started the drill for my private community, but I felt, I'll share it with you guys. I'll share some aspects to it, to you guys, see if it can help you as well. But I specifically did it for my private community to show them, or for some of the ones that are kind of still struggling, still need help with certain things and wanting to continuously have evidence that what it is that we're doing is worthwhile, even though the main focus is minimums. Okay, you guys see that the targets that I aim for, they're massive. They're rooted on the higher time frame, so I can catch those moves over hundreds of points if I chose to, and I'm really, really cemented in the 20 to 30 points situation. So a lot of times by habit, I'll take it out. But I've mentioned too, especially this last year, there's a weakness that I have as well. My weakness is not holding trades longer than I should, right? Or I get out too early, right? Just as habit, right? I'll just click it by habit, have a couple contracts on instead of taking more partials, which I've been doing more of this year, obviously. Been improving that aspect of things. But I've been so much in a habit to target the minimums because that's what got me to being able to do what I've done. And it's also, been what has helped all my students that were not profitable become profitable. It's just so ingrained into my mind that it's like it's a weird state, right? Like that you can move it forward and hold it longer, but just by habit, I click the button. I'm so used to getting in, getting what I want, and getting out, and then going about my day, living my life. So, it's just one of those things. We all have things we can improve upon. And then again, we see the stuff play out. And I've been honestly getting sick and tired of calling hundreds of points of moves. The biggest price run I called this year was 1,500 points, which I called back when all the tariff conversations were just kicking off. It was a sell-off. It's from here. Let me show you where it was at. It was this right here, inside this weekly fair value gap. And you could go back and see I called this move, and I targeted the sell side. I even called this low down here too as a turning point, which was a yearly order block. If you go pull the continuous chart up, you can go see that. And if you go back in here, you'll see I talked about it, pointed it out. But this was one of those things. I was like, damn it, dude. This is what really, really got me thinking like, okay, I'm far enough. It's time to start really figuring out improvements, because you don't want to get too comfortable. But if there's things that you can make adjustments on, I shouldn't say you shouldn't get comfortable. You should get comfortable with something, but always look to things that you can improve, right? Like if it's targets, right? How can you improve either the accuracy of your targets or how far you're taking trades? I only trade for like 2 hours a day, essentially. You guys see when I get on live, I get off in 2 hours. Once the lunch hour comes, or we're like 30 minutes before, I'm out. Because normally I'm already getting the trade on or doing something. If not, generally it's going to be something I don't even want to participate in anyway. But then even in those circumstances, the full targets that I want to see met are generally met. And again, many of you guys are seeing that be true. So I don't even gotta say. I probably don't even gotta say anymore. I'll go look back because I prove it every week. People could just sit and just watch. But it's helpful to see what we talk about, and then the past stuff, just to build more belief in the things that we talk about, so that when you're applying it, you can build the trust, and it could start building the trust, so then you can apply it more effectively. But yeah, there's always going to be things that we can improve upon, and you got to be honest with yourself. I pride myself in being honest, transparent, and everything. So I'm not perfect. I'm not an individual that thinks I'm perfect. I'm not a person that walks around thinking I'm better than anybody. I just have spent more time. I've had some really good mentors. They've been gracious enough to give me their time, and thankfully my mindset was ready to change the things that I had as character flaws, and my willingness to accept those character flaws and improve upon them, and then of course follow the rules and submit when I was wrong, and focus on what I had to focus on has brought me to where I'm at, and then those experiences as a result have also helped the students that I've been able to pass this information on to. So again, you want to be very honest with yourself, and you got to make sure that you're always willing to admit to yourself, especially that you did something wrong, and then go in and spend time with those feelings, spend time with those circumstances, because that's where the growth will happen. It takes time. And again, follow the minimums. Okay? Take down the minimums. Anyone that says you can't pass a funded account, anyone that says you can't quit your job, anyone that says you can't make a full-time, solid, comfortable living off of taking down 20 to 30 points in the NASDAQ with small leverage, maybe one mini contract if you're comfortable with that, or maybe half of that using micros, like 5 micro contracts, which is a level I like to use, because it splits it in half and you get more leeway and whatever. Or you could just use 10 micros and it has a full mini, and you have more partials you could take rather than just taking one mini contract. That's why you guys always see it's micros, the things that I look at, because I like having more contracts on, so then I can take off more partials, or eventually take off more partials, which again is something that I've been really trying to get more solidified in my own trading, because I'm able to call the big moves. You guys see it. That's not a question. It's just that I got to break the habit of always being so focused on the minimums for myself. For you guys, those that have just started tasting clarity and seeing that, oh wow, this is like systematic. I can see myself really doing this because of what's being shown and what I'm seeing, what you're learning. Those of you that are at that level, that are less than a year experience, less than 2 years experience, still trying to figure out your process. Again, if you want to get there quicker, if you want to taste profitability quick, target the minimums. Plain and simple. 1 to 2 trades a day. Target the minimums. Use one model. Use the principles that we talk about in terms of validation, invalidation, how we call bias and narrative. Try to emulate this process that you guys see taking place. And I assure you, your eyes will be open to the fact that you don't need to do as much as you thought you needed to do in order to make some huge changes in your life. Right? And again, aim for reasonable things. 3,000 every 3 months. I mean, that's a reasonable goal. That's like 1,000 every month. That's 4 trades that bag you $250 a week. That is $1,000 a month. So 4, 6, or 4, 8, 12. 12 trades in 3 months can get you 3,000 in 3 months. Obviously, if you double that, you can get to 6,000. It's gonna be 2,000 a month. But then it's like it's a little bit more activity, obviously. But again, this is how you want to think about things. You want to plan things. You can't track what you don't plan for, or have an organized structure around. What you don't track, you can't improve upon either. So it's very important. Track yourself, track what you're doing, figure out a map on how you're going to get to your goals. And profit targets are obviously no exception. Okay. Chris, what broker do you use for futures? So you talking about for Top Step or for my personal account? I don't really want to condone any broker or like be like an advocate for brokers. But I mean, I could tell you the ones that I use. The ones that I have used, I have had no problems with. I had one problem with my personal broker, which kind of sucked. Like they wouldn't let me get out of a trade, and it ended up sending me to break even when I had $6,000 profit. It really pissed me off. $5,800. But yeah, that really, really pissed me off. They didn't do nothing to fix it. They fixed it when it came to ICT, but they didn't fix it with me. So that's it just shows like what these brokers do. Other than that, though, in the last 3 years, I haven't had a problem with the broker I use. I use AMP Futures. Tony, if you're not in the United States, you can use AMP Global, which is the same broker, but they're just like for the international community. But I'm not too sure if you could trade. I don't think you could trade futures outside of America. I think you can have access to it, to that class of assets if you trade through Top Step. I think they offer it. because you're just basically in the eyes of the CFTC, FTC, something like that. In their eyes, the regulators, it's just a demo. So it kind of opens it up for others from outside of America to use it as well. But yeah, I use AMP and I use Tradeovate for Top Step. Again, I'm not promoting them. I'm just letting you know what I use. Brokers are all screwed. They're all garbage. They all want to take your money. They all want you to keep trading and get the fees. And if you do very well, if you do too good, they'll put you on like a list where they'll mess you up, which, is probably why they screwed up my freaking thing and didn't let me get out of the trade. I was crushing them that month. And just all of a sudden, I'm lucky I had a stop loss. That's for sure. Because if not, they were going to trap me in a trade that I couldn't close, and it would have took me out into negative. And I wouldn't have been able to do anything about it. I couldn't do anything about this scenario. Like, they just said pretty much tough luck. It's technical. It's what happens. So, that's another reason why you want to have a stop loss. Okay? Because that could happen to anybody, on any broker at any time. That's one of those unspoken risks, or not spoken enough risks, that are in the environment that we operate within as traders. I've traded Top Step last year. That's before I really started trading futures. Yeah, if you trade, you're in the U.S. Oh yeah. Use AMP futures then. You could try them out. Again, I'm not condoning it. So if something happens, I mean, it's just the stupid brokers. It's the way they are. It's unfortunate. I know a lot of people that use AMP futures too, which is why I used it. And then the icing on the cake was ICT mentioning it, 3 years ago. So that was the one that I chose to stick with. Tradeovate, I've heard a lot of bad things about them. The only reason that I use them in any capacity though is because I am using Top Step, and it's one that I can use on TradingView. Can you put your own money into it? Are you talking about put your own money into Tradeovate? Tradeovate is a broker itself. I mean, they're also out. You can use them outside of Top Step, but they just they're one that connects with TradingView, which is the reason why I didn't choose like Ninja Trader or anything. I wanted to use one that Top Step offered on TradingView, so then I can have both of my brokers on TradingView, or have access to TradingView. Oh, another thing too, Tony, I want you to consider or look into trading with a retirement account, like day trading with like a Roth IRA because you're in the United States, or a traditional IRA. Look into that, because the tax benefits you'll receive once you do get to where you're trying to go, it's vitally important. It's way less confusing, and I mean, I'll let you look into it and you'll see all the benefits. But yeah, that's what I do, and I just withdraw from my retirement account. And I don't care about the stupid 20% whatever. If I don't do that, I'm getting taxed even worse, because it goes by tax bracket. But if you're in an IRA, it's kind of capped, depending on which one you choose to have. But that's how I structure my trading business and income, through trading using my personal account. And this is something most people don't know, because they're not there yet. They never get there, so they don't know this information. It's probably the first time most of you guys have heard this, unless you're in my private community. I've talked to them about it before. But yeah, most people don't know this because they just don't know. They're not paying taxes. They don't have a tax return that comes for their trading. So how would they know? So as a result, they don't even mention things like this. So that's a critical element too. If someone never talks about this type of stuff to their audience, I mean, if they don't know about taxes with trading, I mean, are they really making money? Because it's a really good obvious sign that someone's not trading a live account yet, So nothing against them, obviously, but if they sit here acting like they are and they don't even mention this type of stuff, if someone asks a question, they just ignore it. I mean, it tells you a lot. So That's why I like them. Also, the connection with TradingView. Yeah, again, if you want to get onto TradingView, I do highly recommend getting a AMP Futures account, and then they'll walk you through the whole process. You have two brokers that custody your assets, that allow you to have access to AMP on TradingView. So it's a little process to set it up, and I think it's like $7 a month to get the data, the live data, depending on what you're trying to engage with the asset, or what the category of assets you want. You can get all of them, and I think it's like $30 a month or something like that. So you could trade gold, silver, everything. But if you just trade indices like I do, you don't need all of it. You just need the one that allows you to have indices, and then of course you need the one on TradingView too, the data. And then in order for you to have access to a Roth IRA or IRA, at least through the broker I chose, or the custody company that I use, they pretty much charge a yearly fee of $250 just to have access to trade with a Roth IRA. Because of the tax benefits it receives, they charge you the $250 annual fee every year, which is another thing most people won't understand, because most companies that offer Roth IRA access to day trading with a broker that allows it like this, they charge you. There's a fee. There's a maintenance fee. That's what they call it. Something ICT talked about before, but most people didn't pay attention. I know I didn't until I got hit with it. I was like, what? I was like, why? But I've done taxes with a Roth IRA, withdrawing through that way of doing things, and then I've also done it through having a normal broker. The normal broker was the biggest headache I've ever had in my life. A normal brokerage account, like, they ask you for so much stuff. It's just incredible. And if you don't have good documentation as far as when you entered, what time you entered, what asset, what day it was, like how much money you made, how many points it went, how much was your stop loss, and that's needed for every single entry you've taken. And I'm just like, what the fuck, dude? So it was the biggest headache I've ever had. Now that changes if you have like an LLC or like a S corporation entity. That kind of helps mitigate that. But yeah, I just decided that that's too damn confusing. The whole like broker situation. I mean, I could have went that route. The regular brokerage account under my S corp situation, but or under an S corp situation. But I just chose to just go with the Roth IRA, and or just normal IRA, because it's just the tax benefits are massive. I never knew you could trade a retirement account. And I never knew about the tax benefits that's allowed in the United States for U.S. clients that can benefit you so tremendously. I never knew. ICT talked about it. In the N series, if you go back and listen, he said, he highlighted it at that time too, but also did years ago, prior to that, said that you want to trade most of your entries and executions through a tax-deferred vehicle. That's what he said. He should have just said a Roth IRA or an IRA, which is an individual retirement account. That's what that stands for. But yeah. If you never did those things, you can't speak on that. Yeah, exactly. Yeah, exactly. If they never did it, I mean, you gotta have a little bit of grace for them too. Unless they're trying to sell something without even proving that they're doing it properly or like profitably. At least at a minimum, calling the market beforehand like we do. You know, if they're not even doing that, I mean, have they really traded like a real account? Like, it's totally different. You know, there's good analysts. There's nothing wrong with that. You know, people will still pay to watch someone analyze. They'll still show up to watch you direct where the market's going to go, so then they can participate. You either are a good analyst or you're a good trader. You know, sometimes people do both. Most people will have to pick one. You know, and a good analyst is able to call the market but can't engage because they get too scared or whatever. A good trader obviously can do both. They're a good analyst and they're able to engage. So a lot of times you got to pick a side. Some people, most of the people that look to trade, which is part of the statistics, the downside statistics, is most people can be good analysts because there's no stress involved. But when it comes to executing, they can't execute because you got to position properly. You got to manage your mindset. You got to work on that. It takes years. Because you got to, and everyone's different. So sometimes people get stuck in the analyst role and they can never break out of it. And there's ways to make trading a profitable endeavor doing that, because it's a profitable skill set, worthy, valuable skill set to be able to just simply call where the market's going to go effectively, which we do regularly. Then it's another thing to be able to be a trader and engage, which I also do, right? And I show executions and talk about it live with all my students. So, I'm trying to cultivate you guys into being able to be the trader. But, if it does come to a point where you submit to the fact that you're just an analyst, again, there's business models around that as well. And there's nothing to frown at if that's just the case. Because if you can help somebody else that can execute, call the market, then, that's something worthy of an investment into you as the analyst. Because that's what firms do. They pay analysts specifically. There's a financial analyst role, who analyzes the market. If that's their title. Maybe it's under a different title, but they pay people just to do that. So yeah. You could take it anywhere you want. Just even if trading itself is hard for some people, which it is, and so, that's just the reality. I'm honest, it's just the reality. That's not going to sell anything to anybody, right? It's not the most motivational stuff. But then again, it is, because if you hit a point where you feel that you can't analyze stuff, but you just have a hard time engaging the market, but you are great at analyzing and identifying where it's going to go, that's a huge skill set that you need to really lean into and just submit to the fact that that is your role in the industry, is to be an analyst. And then, of course, if you can be a trader, then so be it. But yeah, they're both good avenues. It's not something to be upset about if that eventually ends up being the case for some, because it will be. You got to be real. You got to be honest. And we are in a very difficult industry. And some people just can't handle it. Maybe life gets in the way. Maybe there's, some stuff internally that they can't get over. And it happens. It's unfortunate. But again, the positivity in this message is the fact that both directions can be taken to changing your life. And if you're a good analyst, you could change someone else's life through trading, but they can invest in you to help them do that, which then translates to you also changing your life. So it's a service in service of helping another, So, yeah. So I hope that is for those that may be stuck. If you do eventually figure out that, hey, I can only be an analyst, you shouldn't beat yourself up about that. You should submit to that and accept that and really lean into that. If you're with me and you decide that, like if you're in my private community and you tell me, yeah, that's what I've decided, then I can help you build a business model around that and teach you how to, how to make that something worthwhile and how you can provide the most value to people to, still become an asset to the overall trading community by doing that. Because you are an asset if that's the case. If you can do that, because 99% of people can't even do that, let alone take trades and trust in what it is that they do. So yeah. So with everything in the background that we have already went through, again, I'm just going to assume that DXY is going to continue to drop unless proven otherwise. Bonds and yields are still going to do what they're doing. So we're going to kind of put that to the side in terms of influence unless something changes. This should still continue to go higher unless we start to see displacement that then violates like this weekly fair value gap here. And then, if we get too close to the low down here, obviously, it may look to start to transition, especially because this is happening ahead of a new quarter. So we're going to want to really pay attention to that. and still support the buys, still support the sells in the DXY, and still support that price is going to be supported to the buy side here within the indices. Okay, we got a fair value gap up here. Again, this whole entire move has been mapped out just like how we mapped out the DXY to be a market maker sell model, a huge market maker sell model when this started. This is working in a very similar capacity. We've been calling for this to be a market maker buy model since we were down here. Once it broke this high, we talked about this dealing range, this special dealing range in here, type 1, type 2. And then we've been just marching higher. I've called the retracement. I've executed with my private community, targeting the fair value gaps in here. And then price turned around, got in line, and we've been also walking price back up. So we've been in this market ridiculously, calling it with everything that we've been talking about. So again, unless this is proven otherwise, this has been classified as a market maker buy model. Okay, I have the second stage distribution that was labeled from this high of this blue candle to the low of this blue candle. I used both because they're just too close, they're overlapping each other. So I just figured I'll just map them both out, just just in case one was going to be used over another. But it turns out that they were both, pretty nicely positioned, and that was a good range. So yeah, and it stayed above that. Stayed above the fair value gap here on the lower daily fair value gap, and then we have just been again marching higher, targeting buy side liquidity, every single target. Like my student Chawezi said earlier, he's been here and he's been watching this real time, watching it just play out over and over and over. And he's only been with me for a couple of months, maybe a month if I'm not mistaken, and he has gotten proof. So he will probably be here for a lifetime. As I hope, many of you guys are too, that get to see this stuff, and I hope we continue to be an asset to you, and you're going to continue to be an asset to the community as well. So thank you in advance for that. And again, thank you guys for spending time with me today. I know these calls can sometimes be long. There's a lot of stuff that we talk about that are vitally important for traders that are developing, for those that are looking for answers for certain things that are plaguing them, to let you know what's ahead of you, to plan for, how to operate certain conditions, the overall analysis as a whole, how this stuff works to get us to where we're going to be accurate consistently. And, it takes some time because I have to explain everything. But when you know what's happening, we're able to just go in and continuously identify things in less than 15 minutes, but again, within that 15 minutes is just technical. A lot of the questions that I get asked obviously expand the conversation. So that's kind of what these days are. These are days where we focus on questions being answered as well as getting the technical framework for what we're looking for the coming week. And soon it's going to be for the coming quarter, which I think is going to be something very interesting for those of you that may have not been here for my quarterly analysis. It's going to be similar to my monthly analysis where we look at COT, commitment of traders, we look at seasonality, higher time frame analysis, and then just add a couple other things as well to try to gauge what's going to potentially be the case. I do want to say too, quarterly time frames, yearly time frames, monthly time frames, weekly, so on and so forth, all have an element of power 3 given the time frame. Right? So in an hourly range, there's power 3 going on. In a 4-hour range, there's a power 3. In a quarterly range, a quarterly candle, there's power 3. Okay? Given the time frame. So you got to think about it from that perspective. And it just goes back to what I said earlier. It really highlights the importance of power 3. And that's why when new students come to me asking for help, you are directed to look at obviously 2022 model, get a foundation and model, learn some of the basics, and then of course skip you on to power 3, because every single day for the rest of your trading career, power 3 is going to be present. Okay, so again, any of you guys that are new, if you haven't focused on power 3 a lot, you better, because it is one of those things that first of all, it'll make a lot of sense of what it is that I do if some stuff doesn't make sense. Why do I start the week assuming it's going to go against the weekly bias or narrative before it chooses to go in the intended direction? Power of 3, right? So, and then the same thing is true for daily range, monthly range, so on and so forth. Okay, so yeah, just wanted to make sure that is highlighted. And again, there's really not much more to break down. Again, I've had this market maker buy model outlined. You guys have known my thoughts in the free Discord, in my private community, and here on YouTube. I've been talking about this for weeks. And what I mentioned going into a new month, I said that it's gonna be kind of hard, kind of difficult. Maybe it's gonna present us with choppiness, so expect that. But we're gonna continue to gravitate higher. Now, if it was to break through this low, that would have been a different story. It attempted, but it failed. I called this bullish order block and bullish fair value gap in here as my line in the sand to shoot price higher so we can position buys. And all through the week within my private community and last Tuesday, we were talking about this fair value gap. And because it's held up, my opinion hasn't changed. And you guys know, if you spent time with me for a while, that my opinion's not going to change if I have a narrative unless something changes on the higher time frame. Bias may change from time to time because it may be bearish for a little bit inside the bullish narrative going higher. But this is just to set up further buys unless 3 PD arrays were going to be violated. We had lows here, a fair value gap, and then another fair value gap. Was that third one broken? No. So what happened? It kept going. This fair value gap, the order block, and the low, those 3 PD arrays stayed intact. So what happened? It kept moving higher. And we're on the higher time frame. So we have good amount of reason to trust that it's going to continue. I targeted the previous week's high. You can go back and look at that as my target at the initial start of the week last week, and beautifully delivered up there. I took an execution. I showed it in my free community or my private community. No, I think I showed it in the free community too. I sent a screenshot after we did it in my private community, but yeah. So hope you guys have gotten value today. It's been a little bit longer than I wanted it to be, but hey, we got a lot of questions to answer, a lot of things to go over, a lot of mindset conversations. And again, this call is generally to answer questions, do forecasting, and then of course try to ground you guys in what you need to focus on, and just kind of be there to support you guys, just as you guys are here to support me here on this channel. So again, I want to thank you for that. I want to thank you for the time you have spent with me. I'm gonna do one more round of questions, or one more I'm gonna ask one more time, do you guys have any questions? And if not, we will put a ribbon on it. And again, I hope everything was clear today. I know some stuff was kind of longer than I wanted it to be, but all important stuff. So yeah, let me know in the chat if you have questions. If you don't, you can let me know that too, so I can know. Damn, I'm not too sure how crazy the lag is too. I didn't even think about that today. Whoops. Hopefully the lag wasn't too bad. But yeah. Alright guys, well with that being said, if there's no questions, we will put a ribbon on it. And again, thank you for your time. God bless each and every one of you. And we will be live here on YouTube on Tuesday. Okay. And then going into, we'll be live again on Tuesday. And then for those in my private community, you know the drill. We'll be live every single day except Saturday. And then in my free community and Discord, I will be obviously sending updates as I normally do. You can always ask me questions there in the Discord, in the free Discord. If you're in my private community, just let me know in the DM. Schedule a time for one-on-ones if you need it. Other than that, again, God bless you guys. Appreciate your time. And don't forget to like the video, share it with your friends, and I will catch y'all on the next one.